Hello and welcome to Simplicity in Stocks. In this video, we will discuss three mid-cap stocks that are down significantly from their respective 52-week highs. These stocks have been selected from the constituents of the BSE Midcap Index. Please note that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. Bharat Dynamics. Bharat Dynamics (BDL) was established to serve as the manufacturing base for guided missile systems and allied equipment for the Indian Armed Forces. BDL has collaborated with Defense Research and Development Organization (DRDO) as well as domestic and foreign firms to manufacture a wide range of missiles and related systems for the Indian Armed Forces. It does a mix of both indigenous and licensed production and covers various applications including air-to-air, anti-tank and surface-to-air systems. The company is the manufacturer for several indigenous missile systems developed by the DRDO, including Astra, Akash, Nag, Rudram and more. The company is focusing on building its in-house capabilities in systems like missile seekers, homing devices, avionics, and engines for cruise missiles. Over the past 3 years, its revenues has grown at a CAGR of around 5.9%, while the net profit has expanded at a CAGR of about 3.2%. Its 3-year average ROE and ROCE are 13.8% and 18.9% respectively. The company is debt-free. At the time of recording, the stock has fallen 31% from its 52-week high of Rs 2096 recorded on 30th May 2025. One possible reason for this drop is the stock's high valuation. It's trading at a price to earnings PE ratio of 80, which is high. Elevated valuations in a stock often results in caution among investors if the market begins factoring in a potential growth slowdown. Godrej Properties. Godrej Properties is among India's largest real estate developers, known for its focus on quality execution, strong brand equity, and a pan-India presence. The company has steadily scaled up through joint developments and outright acquisitions, building a portfolio across housing, office, and mixed-use projects. The management has planned to accelerate growth by stepping up product launches and improving project execution in the rest of FY26 and beyond. The aim is to close the gap between its year-to-date progress and its full-year guidance by ramping up on collections, driving faster construction milestones, and enhancing delivery schedules. Over the past 3 years, sales and profits have compounded at a rate of 39.2% and 58.3% respectively. Its 3-year average ROE and ROCE are 7.4% and 9.5% respectively. The company operates with low debt, as reflected in its debt-to-equity ratio of just 0.2. At the time of recording, the stock has fallen about 30% from its 52-week high of Rs 2917. This decline is linked to the broader weakness in the real estate sector. The Nifty Realty Index has been in a downtrend due to concerns about the slowdown in demand in the property sector. This slowdown has been impacting new launches from realty firms. The stock market is constantly discounting future revenues and profits, and there is a genuine concern that realty firms could post declining results in the quarters ahead. Suzlon Energy. Suzlon Energy is an Indian MNC and a leading renewable energy solutions provider. It specializes in wind turbine manufacturing and wind power project services. The company is vertically integrated, manufacturing all major components of wind turbine generators or WTGs, such as rotor blades, tubular towers, generators, gears, and nacelles. Suzlon offers wind project planning, execution services, and operations and maintenance (O&M) both in India and abroad. Over the past 3 years, sales have compounded at a CAGR of 18.3%. Its 3-year average ROE and ROCE stand at 104.8% and 58.4% respectively. The company operates with no debt on its balance sheet. At the time of recording, the stock had fallen 28% from its 52-week high of Rs 74.3. This decline is due to the market's concern about the company's ability to continue executing the projects in its record order book. Suzlon is no longer a turnaround story. It is being valued by the market as a sustainable long-term growth stock. Thus, any concerns about a slowdown in growth will be reflected in its stock price. Whether investors should consider fundamentally strong mid-caps that are down significantly from their 52-week highs ultimately depends on three things: an investor's risk appetite, the investment horizon, and the conviction in the underlying business. Sharp corrections can create attractive entry points, especially when the fall is driven more by market sentiment than by a deterioration in fundamentals. However, midcaps can remain volatile for a long time, and even recoveries can be uneven. Investors should focus on companies with healthy balance sheets, consistent cash flows, strong corporate governance, and clear growth visibility. For those willing to take a long-term view, selectively accumulating quality mid-caps at discounted levels can offer meaningful upside once the market conditions stabilize and earnings momentum returns. Happy investing!